Hey again, Slopers. It's Brian Johnson with StockMiner.com, back with another video for you guys. Didn't have much to talk about last week, and not sure I have a whole lot to get into this week, but I wanted to do a little follow up with you, talk about a few things anyway. As I tell my subscribers, what we've seen is lather, rinse, repeat. Don't know where I read that. I'm sure I read that somewhere. Anyway, lather, rinse, repeat. That's all we're seeing here the last few weeks. It's very, very tedious. Yes, I know. When Tim gets as frustrated as he is with the markets, you know things are really rough. Tim, I love you, man. Anyway, yeah, it's been really, really tedious. I know it's tough, guys, to sit through this stuff, especially if you're bearish, because the bulls just are relentless. However, if you're bullish, to be quite honest, it really isn't all that much better. I mean, we haven't really gone anywhere the last week or so. It's a very, very slow crawl up. Most of the time, it's led by gaps, which makes it very hard to decide where to get in, if to get in, what to do. Most of what I've been playing has been stocks. I've moved away from the indices because there's at least been opportunities in the stocks, not so much in the indices. So let's blow through this and kind of show you where we're at. Once again, 60-minute on a Dow. Move up, pull back, move up, pull back, move up, pull back. Now you can see these getting closer and closer together, showing you that the market is slowly getting more and more tired. So pullback coming? Yeah, absolutely, it's coming. Question is when? Nobody knows. Look at this huge run we've had. I shouldn't say huge run. Look at this move that we've had since the beginning, just before March started. It's been up, high base, up, high base, up, high base again here, holding this blue trend line, which we find on a lot of the other indices. But holding it strong, has been ducking below it, but not closing below it, showing there's still a little bit of interest left in this market to push it higher. Where? I don't know. Maybe it ends up here at this upper line. As I've said in previous videos, if I'm really, really bearish on this market, I would just as soon have the Dow make it back to this upper mark here and close these gaps. If I'm going to crash or go down or have a giant pullback, I don't know if it's going to break 9,900 or whatever on a pullback, doesn't matter. But I would prefer not to have any gaps above us if I'm going to be bearish. That way we've got nothing or no need to come back and close any gaps when we move down. So I prefer to have these gaps below us. Eventually they're going to have to be filled, and they will be filled. There's been so many of them. Eventually they're going to have to fill them. How long it'll take, when it'll happen, who knows. But this is just grinding people in the markets right now, especially if you're bearish. You keep waiting, keep waiting, keep waiting. And we just haven't seen a drop yet. Wait for more major levels to go before you start looking at this market from a more bearish standpoint. Let 10,500 go. If you don't like these moving averages down here, I don't blame you. Let 10,400 go. That's ultimately where I'm really looking to start getting serious about a bear move. There's a nice flat, I should have drawn it in here, sorry, but there's a nice flat level of support down here right at the 10,400, coinciding with the 20 and the 50 period moving averages here. Beautiful place to start looking for a short if we can get back down below that. So watch this line as well. It has not broken the entire time since back in early February. It's held very, very nicely on the way up for the Dow. Wait for these more major hits before you start getting more bearish on the markets. However, look at the moves. Little to nothing, day after day after day, as it just grinds its way upwards. Yes, it's going to happen, bears. It's coming. I'm confident of it. It's definitely coming. Just a matter of when. Let the markets do what they're going to do. They're always right, and we can't do anything about it. We together don't have enough money to move these markets the way we want to move them. So it is what it is. The charts are what they are, and you just wait for more major levels to be broken before really taking your positions. NDX on a 60-minute did finally break this blue line here. Most of the other indices have done this, have broken this blue line here, and they've come back to test them in most cases. NASDAQ has not. If it does that, it will hit an overhead target for me of about 1950, 1960, somewhere up in there, and this does look like it could be setting up for just a pullback right now. after one day, hard to tell. But in this case, sure does look like a pullback. If 1900 holds, don't see why the NDX can't move to a little bit more of a move up here before it's all over with. SPX on a 60-minute here, it broke. Well, I don't have that line drawn in anymore. Here are the new trend lines I have drawn in. You can see the little channel that we're following here. Did drop through that channel line only to come back and retest this line here, which coincides with the 50-period moving average on the 60-minute chart. Notice how it crept its way back up here. Looked like it might retest here and then drop. And, of course, the markets have other ideas. Just when you think it might get bearish, yeah, no, I'm going to keep going up. So back to 1150, right at a double topping area. Watch this area up here. I am seeing a confluence of overhead resistance up in this area. So be very conscious of this if we do break up and over the 1150 area. Once again, my strategy currently is to be very careful playing anything to the long side and holding overnight. I still think the risk is to holding overnight rather than to the downside right here. SPX on a daily, once again, here is that blue line on the SPX. You see that we tested it, maybe dropped below it, but closed above it by the end of the day, putting in a potential double top area here, but can't be considered that yet till we get some confirmation. We are right up here at the 1150 area and holding above this blue line, so that we just have to view this as a potential pullback right here until we see more major levels go. I ultimately am looking for a break of this 1130 mark. Would love to see that come back into play. That was a major level of overhead resistance and support before, and that just cut through it like Buddha on the way through this time. So I would expect to see some sort of a pause if and when it got back down here. 1140, if you're a little bit more aggressive, you might want to start looking for a short below 1140 on these charts here. All right, the only other thing I wanted to show you was this. I keep hearing these people on CNBC talk about the dollar and the markets and how the dollar's moving inverse to the markets. And you know what? I haven't seen that. I don't pay much attention to the dollar and how it's moving in association with the SPX. Why? Because you know what? The charts are what they are. Each chart is different, and it just is what it is. If it's going up, then you chart it and you play it as such. Yes, it's kind of nice to use these as potential indicators sometimes, but I don't see a big deal. I don't know why I'd want to watch the dollar if I'm interested in which direction the SPX is going. I don't always see a correlation there. Granted, it had been pretty good down until about December. Now look at this. Since December, dollar moves up, markets move, yeah, pretty much flat. Dollar moves down, markets move up. Dollar moves up, markets do move down. Dollar's kind of coming down, market moves up. But you know what? It's not working out in correlation. Look at this. This was the last time we were at this point with the dollar. Right here. And that was, what, 925 on the SPX? Now we're right back up to that same area, hitting the 950 area here. But the SPX isn't matching what the dollar's been doing. So we've had a huge move up in the dollar, and really we're above where we were at the time of December when the dollar started moving up again. Now, if it truly was moving in inverse, correct me if I'm wrong here, maybe I'm missing something, but would the SPX not at least be back into this area here to coincide with what we're seeing over here? So the whole correlation dollar market, I don't buy it anymore. Matter of fact, I'm not so sure that they're not going to start moving in unison with one another here before too long. It wouldn't surprise me at all to see this be some sort of an ABC correction, and then eventually this starts to drop, and this starts to drop as well, and I don't know. I haven't really looked that much into it, but I do know this. I would not pay too much attention with this whole dollar inverse correlation to the markets type stuff, because the evidence is not there for me. It got to go back to the evidence, and I don't see it. So anyway, that's where I'm going to end the video. Keep your eyes on the larger support areas for your mark. Don't try to guess. Don't try to call a top up here. You're just wasting your money. You might as well just write a check out to me and mail it to me instead. Don't just sit on your hands. You're better off to sit on your hands and wait if you're going to try to go short this market without any good confirmation. Wait for major breaks in the market. That will be your confirmation. That is what I'm looking for as well. So have a great one. Talk to you guys again soon. Bye.